So Julius, how did we meet?
That is a cool story. We actually met in real life. I know exactly where that was. That was in San Francisco during the IFTA conference. And I think it was 2013.
Okay.
2013. Because
Yep.
RRG was launched on StockCharts in 2014. And we met in October 2013 in San Francisco. And that was after the introduction of our mutual friend, Greg Morris.
Yes.
So that's it.
And then I remember also later you came to Seattle and you came to one of our conferences.
That's right, yeah, because at that conference in San Francisco, we were basically updating, because we had met over email, I think since 2009, 2010, after an introduction by Greg Morris, and then it sort of died off, the connection. And then we reconnected in San Francisco. That worked out really well, and we kept in touch. And then we met again at the CMT conference, the
That's
MTA
right,
conference in April in New York. That's where we kind of, came to an agreement on that we were going to put RRG on StockCharts.com and how we were going to do it and how we were going to make all the arrangements.
I remember that conference because I was sitting in the back and you made your presentation. Now this was after a bunch of other people had made their presentation, and the people in the room were not like super enthused. But then Julius gets up and he starts showing his RRGs and everyone in the room. I noticed this. I'm not watching Julius. I'm watching everyone else. Leans forward in their chair. They're at the edge of their seat. They're hanging on your every word because they're like, "What is this?"
Yeah. So that happened, and then we agreed, and we got along pretty well pretty soon. And you decided, yep, I want to get that on StockCharts on the website. Started working on it, and literally like 3 months, April, May, June, July, 3 months. In 3 months, it was all there. July 14, I think, we launched RRG on the StockCharts website.
Okay.
Yeah. Can you believe it? It's almost 10 years. Next year, it'll be 10 years.
It does not seem like that.
No, it doesn't. It doesn't, no. So, yeah, that was very good. I dig it that you got interested in RRG because it's a specific way of data visualization, like away from the standard, say, boring time price axis, which we all need and we all know, but sometimes you want to do something different. So in terms of data viz, have you got anything that you would like to add or thought, where's your thought going when you think in terms of data visualization, stuff that you want to do with StockCharts that we do not have currently?
Yeah, that's a great question. There are so many different ways to visualize data. You and I have looked at several different kinds of charts that are used in other fields, but have not been used a lot in the financial field. There is aspects of looking at data in 3 dimensions. There's aspects of using other kinds of color, other kinds of symbols, other kinds of ways to add another dimension to the data besides just X and Y, or time and price. I am a big fan, as you know, of Edward Tufte and his books. And he has several of those books that I've read. They're just inspirational. Every time I read them, I pick something else up about stuff that we can add to the site or to our kinds of charts. I talk about the bar. I always feel that there's certain things that we have to do in order to be useful to the financial community, and we certainly want to do that and do that as best we can. But there's stuff that's above the bar that is kind of never been done before, and brings computers and the web and all that technology together in ways that people can then get a new perspective on what's actually happening in the markets, and hopefully can benefit from that.
Yeah, it's interesting that you mentioned 3D visualizations, because a lot of people have asked me about RRG in 3D, and I actually played around with that. And I mean, I love 3D visualizations, but don't do it when there is a time element involved. As soon as you need to start, scrolling through time, you will lose. There is no anchor. That's the problem. If you have a 3D chart, you have to basically turn it around, because if you look at it from this side, you can't see what's on the other side. So you need to basically, with your mouse, grab it and start turning it around. or flipping it to see it. If there is also a time element involved where that 3D chart is changing and you completely lose track. So I played around with a very, very basic version of RRG in 3D, and I quite rapidly decided against it. I mean, that's not going to work. The way I want to add like a third dimension to RRG is on the nodes. So you can add like, size the bubbles on the nodes. You can play with colors. You can play with borders. You can make them thicker or thinner. So there's many ways you can add a third or a fourth dimension to a graph like RRG without having to go the 3D, like with the z-axis, so to say.
Right.
So that's very interesting.
This also revolves around and touches around the other thing that you talk about a lot, which is sector rotation, industry groups, relationships between groups of stocks, and a lot of it is about visualizing those relationships in one way or another. We have, for instance, our market carpet, and there's certainly an aspect of the market carpet, and you talk about 3D, where maybe it becomes more like a Rubik's Cube kind of thing, and you can see additional relationships between sectors and groups that you wouldn't otherwise see.
Absolutely. I mean, for something like the market carpet, it makes total sense to do it in 3D because there's a snapshot in time. It's a snapshot in time. So there's not like, in the RRG we want to see it rotate and scroll through time. With a market carpet, I can see a market carpet in 3D and even have it scroll through time, but then it will, the pillars will, or the blocks will move up and down with some metric. That I can totally see. Because
I've always been drawn to the sector rotation. It's been one of the first things that we put on StockCharts way back at the beginning. Just the idea that there is a way that has some predictive value about what's happening right now and why and how that might go further. We've always it started with John Murphy's book where he referenced Sam Stovall's work before that at S&P. And we took that and turned that into a nice graph and our perf chart tool. And then to me, RRG is an extension of that same approach.
Well, I actually use Sam Stovall's model like every quarter. I do an update on the sector rotation model. I bring up that model and I talk to people and I say, listen, this is the theory. So according to the theory, and I think what a lot of people forget is the four macroeconomic indicators that are part of that sector rotation model. It's not only about the sectors, it's the four macroeconomic indicators that define the economical environment in which we are currently are. And then on top of that, you've got the sectors. So I talk about where we are, and I analyze those four macroeconomic indicators and say, right, so according to this, we're probably here, try to pinpoint it. And then I say, all right, this is the theory, and here you've got the RRG, which is the actual what's happening right now in the market, and let's see if we can find an alignment. Let's see if we can find alignment between where the sectors are in theory, where they are on the RRG, and how that aligns with the economic cycle. And actually people love that. It's a great way to step away from the day-to-day noise. Do it only once a quarter. It doesn't have to. You don't have to do that every day. And it gives you a great framework, exactly because it gives you a little bit of a roadmap into the future. If our analysis is right, that means that we are in this point in time, and that means that very likely we're going down this path.
Yes, as you know, the sectors and the industries, there are just so many different ways to visualize those. The work you've done so far is outstanding. But I think there's more. There's always more that can be done to help people see those kind of things and not only see but discover on their own relationships that maybe nobody else realizes exist. That's how you get a real advantage, a real leg up in the market, is when you can visualize something that maybe nobody else has noticed yet.
Yeah, something needs to stand out, and I think here on StockCharts we need to actually give them the tools to do that and to figure that out. And if you talk about sectors and data and groups, that's dear to my heart, as you know. And there is so much more to be done there. We can come up with. I think a lot of people lack structure, probably in their lives as well, but certainly in their certainly in their investment process. And I think we can help them get a little bit more structure into that process by getting good definitions on which are the sectors, how is that sector broken down in several groups, is it offensive, is it defensive, is it growth, is it value? You can slice and dice the universe in so many ways, and yeah, we have plenty ahead of us to make that work.
Yep. Nowadays, of course, and it's been this way for quite some time, you have ETFs, and other ways you can actually invest in these trends or these relationships that you see without necessarily needing to know the individual stocks. It's a very, very interesting little playground that you get to do if you want to be a sector industry kind of investor.
Yeah, I mean, ETFs are a great instrument. I mean, for me, ETFs are an instrument to translate your view into to exposure to a view. I mean, I'm going to give a little rant here. I do a lot of asset allocation stuff, and I think people are kind of overthinking that, or maybe not knowing what they're doing, because I hear people talking about ETF as an asset class, and that is, I don't get it. I mean, if you trade SPY, that's clearly an ETF, and it's related to stocks. So that in my view, that belongs to the asset class stocks. If you trade IEF or TLT, that is a bond ETF, that belongs to the asset class bonds. Not all of a sudden SPY and TLT are in the same asset class. That just doesn't make sense. Yes, so you gotta make a distinction and know actually what you're talking about, and just realize that an ETF is a derivative. It's a derived instrument that tracks a certain group, and it can be a sector, can be a group, can be an asset class, can be commodities. I mean, there are many ETFs, but they belong to a certain asset class. And to what you say, it's a great way for investors who don't want to go into the nitty-gritty of individual stock selection to say, hey, I want to have a portfolio that is 40% in stocks, SPY, 40% in bonds, GOV or TLT, and I need 20% in commodities, DJP, GSG. So you can make up a real nice portfolio, but maybe 4 or 5 ETFs, but underlying you got the world, you got the S&P 500, and so you got a really well diversified portfolio, but your investment account shows only 5 lines.
Right.
So it's a great tool for that.
So there are 2 things that you're mentioning right there that are things that StockCharts wants to work on in the near future going forward with our tools. The first was allowing investors and traders to be more organized in what they're doing and be able to see and have a better sense of their current portfolio, their past portfolios, their trading, how they did, just getting a sense of their history. When do they trade well? When do they not trade well? How can they trade better consistently throughout the whole thing? So there's that trading organization piece that we want to give. And then the other piece is the asset allocation piece that you're talking about, where it becomes easier for people to just know that they are either correctly or well diversified, or they know that maybe they're not as diversified as they need to be, and they need to look at this angle or that particular thing. Those are both tools that are near and dear to Grayson Rose and his father. Alexander Elder and his approach to stuff is something else we're drawing from. Lots and lots of books out there that talk about these topics, but a lot of times what happens is that at the end of the book you're like, it doesn't tell you what to do. At best it might give you a spreadsheet for Excel or something, and I think a lot of people use those things. We want to allow them to do that on the web and allow them to carry that with them just like they carry all of their charts at StockCharts. Make it much, much easier to understand what's going on.
Yeah, and that's a good thing, because we all know that spreadsheets are a great tool, but they're also a disastrous tool, because they become very messy very, very soon. So anything that can help them to keep their portfolios organized, have a good view on it, will certainly help to that degree.
Yeah, and so that's where we want to move in the near term.
So with the notes, are you talking about the chart notes that we can put on the charts right now, like keeping history or?
Well, again, right now we provide the ability for you to add commentary to the chart itself through annotations. You can comment on the chart itself as you save it into your account, or you can comment on the entire chart list that you have, essentially your folder
Right.
of charts. But all of that's very free form right now. It's not very structured, and it
Right.
doesn't allow you to add macro information or even audio visual information. So you can't like add a picture, and you can't say search, show me all the stocks where when I traded it, I made a profit of more than X percent. You can't do that, even if you had it all recorded.
Yes. All right.
Being able to kind of get all that meta information about the trade itself and how the trade occurred. What was your mindset when you placed the trade? What was your mindset when you closed the position? Did it meet your goals? Did you change your goals? Did you panic? Did you give in to the crowd?
That's
or
really
did you
interesting.
keep your mindset, and did you follow through on your original plan?
That I think that'll be really helpful. I'm not sure whether a lot of people are doing that, but they certainly should.
Yeah. There's also the idea of risk management. So Alexander Elder talks about this a lot in his books, but when you're placing a trade, there should be some restrictions on how much risk you're taking relative to your trading portfolio, relative to your overall portfolio, and also relative to your recent history. I mean, have you been doing well, or have you been not doing
Yeah.
well? And if you haven't been doing well, maybe you should take a little time, reevaluate, take time off. So these are tools that are out there and they're available, but it's right now requires a lot of self-discipline to use them properly. We're going to try and make it as easy as possible. If you want to go this route, you don't have to, of course, but if you want to go this route, we want to make it easy for you to manage risk in a much more visual and visible way than before.
Yeah, and provide the tools to do that, to
Yeah.
make it as easy as possible. Yeah, for sure. Favorite chart? PNF?
So yeah, I'm very much about the visuals, and one of the things that I found really, really unique in our current offerings that a lot of people pass over, but they shouldn't, are point and figure charts. Point and figure charts allow you to see and understand trends in a much more insightful way than on a normal bar candlestick chart, because every column of X's that are going up, O's that are going down, is itself a trend line. So I used to show in the speeches I used to give, imagine those old lamps where you'd stretch them out,
Yeah.
and the
Yeah,
lines,
yeah.
you know, the lines that held the lamp would go sideways. That's what a bar and candlestick chart is. Each one of these bars is a trend. But what happens with a P&F chart is you collapse. You're like collapsing that lamp, and all those bars that were trends that were sideways suddenly become vertical, and that's exactly it. So what's interesting then is if you see a trend on a P&F chart, and they're always 45 degrees, which makes it really easy.
Yeah, absolutely.
That's a trend of trends. And that's really interesting. I think that's more significant than what you would normally or get from just looking at a standard bar and candlestick chart. The other thing about P&F charts is they automatically filter out the insignificant movements, the noise that you may not care about. People don't understand sometimes that P&F charts, it could look like a really small chart, but it could actually span years.
Oh, many years. Yeah.
Depending on how the stock is moving and how much filtering that you're doing on that chart. So I find it, and I recommend that people spend a little time to fully understand P&F charts. They can really bring a new perspective on what you're seeing, especially if you're a trend-oriented trader.
Yeah, I mean, I love P&F charts. To be honest, I don't look enough at them, I feel, but they are super valuable because exactly what you say, they cut out the noise. You get the real heat of what's going on in the market without all the day-to-day noise. And I remember, way back, Tommy Dorsey, you know Tommy,
Yes.
he's a big advocate on point and figure charts. He used them all his life. Tommy started using point and figure charts on relative strength. Relative strength is really my thing. So doing P&F on relative strength, that opens up a whole new way of looking at things.
Absolutely.
And that is super interesting. So I think it's with a lot of the old, people are trying to do new things. They want to find the new, I don't know, whatever is out there. They find the pot of gold at the end of the rainbow, or a foolproof indicator. It doesn't exist. We all know it doesn't exist. Everything comes with its flaws. So when people ask me, what is your favorite book or which books you use, I always go back to Edwards and McGee. Technical Analysis of Stock Trends. I have a copy on my desk, which is like super old. I think it was printed in 1969 or something like that, when I was 6 years old. And it's still valid today. It's still, everything that's in there is still valid today. And then on the web, I see people labeling chart patterns, which is another, favorite subject of mine, chart patterns. I actually taught classes on technical analysis and chart patterns and trend lines. It's one of the things I did a lot about. And the problem is chart patterns don't show up too often. It's not every day that the chart pattern shows up. It's an exception that a chart pattern shows up. But right now, everybody wants to see wedges and head and shoulders and everything becomes a chart pattern. No, that's not the case. This is totally bogus, but you can't fight on Twitter or Facebook. It just doesn't make any sense.
When you have a hammer, then everything's a nail, right?
Yeah, exactly. Yeah, well, no, that's it. That's it. Yeah, so the same with point of figure, adversary, just use the classical. The classical stuff doesn't change. Well, I remember now a saying by John Bollinger. He does his talk. He's got a talk which he calls first principles. You can innovate as much as you want. You can backtest. You can come up with strategies, and they will work as long as they are based on first principles, stuff that we know works. Trends, relative strength, all that old stuff, and then you can put it into a new jacket, and you can start playing around with it with all the new tools that we have. But you got to know that the base principle, that is a valid principle, and that is what's needed. And that's the same with the point of figure charts. It's the same with price patterns, chart formations, all that. You got to make sure that it works.
And all of that in turn goes back to what actually drives the market. When I talk about this kind of stuff as well, talking about first principles, basic principles, it's fear and greed, and it's fear and greed of scared and over enthusiastic investors. That's what makes the trend happen. People need to understand, they like to think that the newest, latest indicator will give them insight into what the price movement is going to happen. Not if it isn't tied to the actual fear and greed that's existing in the market at that point in time. And really, there's not a whole lot better than just standard trend analysis. Any indicator that helps you confirm your trend analysis can be your friend.
Great.
But any indicator that kind of has glossed all that over, or maybe it's the derivative of a derivative of a derivative, you've lost it. You've lost the connection to what's actually driving prices.
Exactly. Yeah.
Indicators should help you see those patterns and see what's driving prices better. And if they don't, then they're probably not very helpful.
True. And I think that while you said fear and greed, and talking about classic stuff, all of a sudden it popped up in my mind that probably the millennials, if we want to call them like that, they call fear and greed FOMO and YOLO. Yep. I just made that up, but I think I need to actually.
So we need the FOMO YOLO indicator.
Yeah, something like that. And then a way to visualize that.
Yep. Well, people do ask me what my favorite indicator is, and I don't have necessarily a specific favorite, but there is one that I usually talk about when they ask that question, and it's the Chaikin money flow. And I usually talk about that because I think it does a good job of combining both price movement and volume. So the other thing about finding trends, classical analysis, these kind of, is you need a way to confirm what you think you see on the chart, and volume is the way you confirm this stuff. There should be specific patterns happening in volume at the same time things are happening, say, on the trend of the stock, so on and so forth. And most people, I think a lot of people nowadays just overlook volume completely. Well, the Chaikin money flow does combine the two in a really interesting way to end up with a single line. For those that can't look at two things at the same time, it's nice to have these indicators that do combine volume and price into something that can be helpful.
Yeah, so that's interesting, because I do feel that, first of all, volume is overlooked very often, and it's a crucial part when you do pattern recognition. You want to have a breakout on big volume, but on the other hand, you've been around for a while. the markets have changed a lot.
Yes.
You know, so I always, and I don't have the answer. I'm still struggling with the thought process around it. But how reliable is volume nowadays? I mean, 20 years ago, 25 years ago, there was one marketplace. That was the New York Stock Exchange. That was where the volume was, and that was reported, and that's all fine. Right now, market is completely scattered. You got all these different exchanges. You got ETNs. You got dark pools. Stuff is not reported. Stuff is reported like 3 days after the fact. And so I have a hard time, you know, coming together with how fragmented that volume is, and how reliable is it still?
Yeah,
so
and that's all. Well, it's always been true, because you know, the thinner traded a stock is, then the less reliable its volume is, the less so on and so forth. But it's all about giving you the macro picture. So in other words, the bigger the volume is, the bigger the stock or the index is that you're tracking, then the more reliable that will be. But the smaller it becomes, then the less useful it is. I agree, and it's become very. Again, it's not unlike a thinly traded stock.
no, but that is between a large cap and a small cap volume. What I mean is, like, you can have Microsoft, but Microsoft is trading at so many different exchanges and outlets with different volumes, and you know, how reliable is that volume? Let's say if you trade, Microsoft trades on NYSE, there is a bunch of volume, but it also trades on different exchanges. So if all of a sudden a massive block trade is executed off NYSE, you know, and we don't see that in our volume, or it's traded on a dark pool, you know, so how is that impacting, and how reliable is that volume that we get? And I know that, you know, there's a lot of data vendors that are now aggregating volume from different exchanges. You got all kinds of different tapes, but I feel that, I'm afraid, I think that volume nowadays is less reliable than it was 25 years ago, because we're not covering all of the volume that's traded. So yes, volume is important for me, but I look at it differently than I did 20 years
Sure.
ago.